girl here with another video for you all. I know you guys have been wondering, how does this Forex thing work? I promised you guys a video. I know I was supposed to do it a little sooner, but things have been pretty hectic around here, so I apologize, but better late than never. Alright, so in addition to me showing you guys how Forex works, I'm also going to show you guys how to be profitable in these markets. Okay, so we're going to head on over to Market Street, my computer, of course. And, we're gonna show you guys a little something, okay? But before we do that, I'm gonna need you guys to go ahead and like it up. I'm gonna need you guys to click that good old bell, subscribe to my videos, subscribe to my channel, so you guys will get those notifications as well when new videos have been released. Okay, in addition to that, I do need you guys to share this. This is some useful information. Okay, um so let's get it. All right, guys, here we are on the charts. um the market is closed right now, so you won't see any movement. Okay, once the markets open back up, you'll start to see movement. All right, which means you'll start to see these numbers moving. You start to see the candlestick, this candlestick here, moving. But right now, it's closed, so you won't see any movement. Okay. All right. So, first things first, what is Forex? Okay. Forex is, just briefly, Forex stands for the foreign exchange market. Okay. And what is the foreign exchange market? And that is the exchanging of currency pairs. Okay. And to kind of put that into perspective for you, what that is, if you've ever gone to or traveled out of the country and you've been to the airport and there's either maybe a kiosk or there's a front desk where you can exchange the currency that you are pocketing for the currency in the country that you're traveling to. If you've ever done that, you participated in the foreign exchange market. Okay, so typically what you see is you'll see you'll see a screen with numbers. Those numbers pretty much, what your currency is worth against the currency that you're exchanging from. So if you've ever done that, so if you've gone to Japan and you've used your USD dollars or whatever currency you have to exchange it for the yen, you would see the price for your dollar up against the yen. So if you've ever done that, like I said, you've participated in the foreign exchange market. And that's pretty much kind of a visual, kind of to put it into perspective on what Forex is. Okay. Now, how does it relate to these charts? So what am I looking at? Your charts are made up of candlesticks. Okay. You have your bullish candlesticks and then you have your bearish candlesticks. Okay, so what's in green is your bullish candlesticks, what's in red is your bearish candlesticks. Okay, so as you can see, your green candlesticks are going up, your red candlesticks are going down. Okay, so that's pretty easy to understand. Green up, your red candlesticks are pretty much going down. Now you can change these candlesticks to whatever color that you see fit. However, red and green, or sometimes blue and red, are the colors most people go with. Okay. Anyway, I say that to say One of the easier ways that I learned as a beginner, kind of how to read, on how to read the charts just starting out, is as following the trend. Okay, so you have your charts go up and down. So anytime you open up charts, you pretty much see a bunch of zigzag lines going up and down, down and up and down. Okay. And that's what you're going to continue to see. You will always see that. You may see a little bit of consolidation, and I won't go through that in this video, but you'll see a little bit of consolidation. But for the most part, the charts are going up and down. All right, so an easier way for me to understand when to place my trades or whether to place a buy or a sell is I follow the trend. All right. How do I do that? First things first, what comes up must go down. What goes down, what must come up in Forex. Okay, so we'll start here. I'll draw my line. All right, so this line, this diagonal line here represents a downtrend. As you can see, if you were to take a car, you sit it up here at this tippy top and you let it go, what's it going to do? Go downhill. All right, so this represents a downtrend. Okay, this right here, from here to here, represents or is representing a uptrend. Okay, so if you were to right down here, if you see my cursor, if you were to, take a hike and, you're starting down here and you have to walk up this tall mountain, you already know that you have to take, if you see this long hill, you already know that you have to walk up. So this is an uptrend. Pretty self-explanatory. All right. So that's one way I started out with reading the charts. Okay. I used to place my trades by following the trend. And I mean, I still do this, but I have other strategies and techniques that I use as well to help me find the best entry for my trades. But nonetheless, this is one of the easiest ways for you to begin trading on your demo account. All right, so follow the trend here. Also, I'm going to go over support and resistance because that's going to help you out with entering your trades. Okay, so once you realize that what trend you're in, so okay, I'm on a downtrend, uptrend, we're good. Next thing we're gonna look for is our support and resistance. Okay, what is support and resistance? Okay, so support and resistance are pretty much levels of security in the market at which price may in which price will reverse. Okay, so what do I mean by that? I need to make that a little smaller, possibly. All right, so levels of security in the market at which price will reverse. Okay, so what I mean by that is not all trend lines are diagonal. You have trend lines that are horizontal. Okay, and looking at support and resistance, let me just kind of point out. Let's see. All right, so support and resistance levels. All right, so here you have an area here. Okay, maybe that's not gonna work there. Let's see. All right, let me delete that. All right, so support and resistance. This will be your support area. I'm trying to find a, let's see. So we'll do a brush. And right here, well, right here will be your level of support. So I'm just gonna draw a circle. This line right here is your support. You know what? No, I'm just gonna draw a line. And we're gonna make this line red. All right, so you have a support line. Let's make it thicker. All right, here we are. So this is your support line. Boom, your area of support. Your area of support is, like I said, a level of security in which price will touch here and reverse, okay? As you can see from this bearish candle on down, we've gone down, it bounced here and came back up, okay? And then also within the market, you have areas where price touches this point quite often. All right, so that's how you can pretty much tell the strength of your support and resistance that you're marking up. Okay, so let's try to find another area in the market in which price pretty much did the same thing. Boom, there it is. All right, so price also right here bounced. Boom, support. Definite indicator that it's going to go right on back up. Boom, here we are. Went back up. All right, so those levels of support are very, those are very important in determining, the direction. Also, it helps a lot when to determine when to enter the trade, okay? And whether to place a buy or sell. Now, if you're wanting to catch some quick pips, we're on the 1 hour time frame, so each candlestick is worth 1 hour, okay? Represents worth 1 hour. So if you were in the market right here and you ended at this candlestick, you would enter in a buy right here just for a few hours. It doesn't necessarily have to be the full 3 hours, but you would catch some good pips here, okay? A little bit of drawdown, but overall you would catch you some pips here, okay? Then you have your level of area of resistance, okay? That's the same thing. Matter of fact, let's see what we can do here. Will it allow me to draw an arrow? Will it? Maybe, maybe not. Nope. All right, we'll just type it. Let's put a text right here. So, support right here. Boom. All right. And then we're going to find some resistance levels here. And we'll mark this up as green. Let's see if we can see it though. Oh, there we are. All right, so here's a level of resistance. Let's see. Boom. 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 Oh yeah, we did pretty good here. All right, so here's your levels of resistance. This is another level of security at which price will reverse, okay? And here it is, you see it for yourself. All right, so you have your resistance level right here. Boom. There's another one. Let me log in. I'm sorry, guys. There we go. All right, so I'm sorry, I didn't even log in. So there we are. All right, so you have your support and resistance levels right here. As you can see, price hit this point right here. Boom, it touched, bounced back, boom. So you would enter a sell right here. Okay, same thing with here. You would, here's an area of support down here. So you could have caught this, rolled it up, or since this is a secure level of where price has hit, touched before previously, you know, this would have been a good opportunity. See, it's touched here before, previously, it's touched here previously, it's touched here previously, and here we are again. Okay, so this would be a good area for you to place a sell for a few hours. Here's another sell point for a few hours. Let's see. Yep. Let's see, you could have placed a sell here, but you would mark up some previous levels of resistance here. So you can put trend lines in areas where they've touched previously, okay? It's all about the history in the markets, okay? If it's done it before, it's going to do it again, all right? And if it hasn't done it, so if this is the first time in history, just know that in the future, it'll do it again, all right? So that's pretty much how you can tell this is how you determine your support and resistance. So pretty much level of support, boom, right here, resistance, boom. So let's try it out. Let's see here. So you have support, resistance, support, resistance. Let's look again. Support, resistance, support down here, resistance, boom. Okay. Support, you see my mouse? Boom, resistance up here. Support, resistance. All right. So pretty easy. That's a way for me to tell how or when I should enter in the markets. Okay. Let's see. All right. So let me fix my screen here. All right. So like I said, very easy. Practice this on your demo account. Next thing we're gonna go over is pips. All right, so this is very important to understand, and I'll go over it more in depth in other videos. Okay, so what are pips? First of all, pips are and we need another color. We can do go back to this blue. Not sure what color blue that was. Here we are. All right, so pips are CRP. Stands for percentage in price or percentage in point. Okay, you may have heard both terms. Both are the same. No, no good or one is not better than the other. Okay, so it stands for percentage in price or percentage in point. And pretty much what that is just your it's the measurement of your currency pair. All right, so your we can look at let's see, we can look at euro USD here. As you can see, you see these numbers on the side. Okay, 1.18085. All right, so this is your exchange rate. Okay, your pip is the movement. You don't see it right now, but the movement that measures the currency pair. All right, so for instance, and I'll type this up. All right. Let me. Let me. All right. So for example, let's see, 1.1808. You wouldn't, that last number, so that 5 right there, that's actually your pipette. Okay. You'll see that move. But 1.1808. Say if you see we're trading, that's the number that you see. And if it goes up, if it goes from 1.1808 to 1.1809, that is 1 pip. All right. All right. So, and if you were to, we're not going to go into lot sizes today, but I have to mention it for this purpose of explaining the pips. But your lot size is just pretty much your leverage. So say if you want to leverage 10 cent per trade, so that would be 0.01. That equals 10 cent. Okay. All right. So you can write that, you can jot that down in your notes or on your computer or phone or anything, because I'm going to go ahead and erase that. All right. So that equals 1 pip. So let's say you're trading with a 10 cent lot size. That will be 1 pip will equal your 10 cent. Okay. 1 pip will equal 10 cents. So on that trade, on MetaTrader 4, you will see your account go up 10 cents. Okay. So you will see a positive 10 cents. And that's 10 cents. When you're doing your lot sizes, you would have to add another 0, but in front of that 1, but that's 10 cents. Okay. So you would have made 10 cents on that trade. Okay. Now, mind you, as long as you are, you're in profit and the trend, the trend is going to go up or it's going to go down as you predicted. Of course, you will make a little bit more, you'll make more money, but if it went from 1.1808 to 1.1809, that is 1 pip. And if you're trading on a 10 cent lot size, you've made 10 cents. Okay. If you were trading on a 50 cent lot size, you would have made 50 cents. Okay. Boom, 50 cents. You would have made 50 cents. If you were trading on a dollar lot size, you would have made $1. Okay. Make sense? All right. If you were trading on a 10 cent lot size, a $10 lot size, you would have made $10. Okay. So that's how that goes. All right. That's how you actually get to see your profit. All of that. Okay. Now if you were either drawback or if you just placed a bad trade, then if it went in the opposite direction, so if it went 1.1808 to, and it doesn't necessarily mean that you lost anything, and I'll explain that too. 7, missing a number, 1807, that is also 1 pip. That also equals 1 pip. Okay. And depending on whether you've placed a buy or a sell, if you placed a buy, you're now in the negative one of that 1 pip. So you lost 10 cents, or you lost $1, lost 50 cents, or you lost $10. If you would have placed a buy and you and the market dropped, then you will be losing money. But if you place the sell and the market drop, you will be gaining money. Okay, so I'm not gonna, like I said, I'm not gonna go into much detail about that, but that's how you measure pips. That's what your pips are and how it pertains to your profit. Okay, your profit or your loss. All right, so I'm gonna place that here. And let me put your base, your standard. We'll do 10 cents, okay? Which equals, and that equals 10 cents. Okay, 10 cents. All right. Okay. So, and this is another example. Even if it goes down, the market goes down. If you place the trade on a sell, if you place the trade in the right direction, you would still profit. Okay. So it doesn't necessarily mean you have to place buys every time you trade. All right, because the market goes up and it goes down. You can profit either way. Okay, so there you are. That's your pretty much your example. Okay, all right, so that's pretty much it. Like I said, I don't want to get into much detail. You have your Forex, what that means, support and resistance, and your pips. If you have any questions or if you want me to do a video on anything else, please don't hesitate to leave a comment so that we can discuss it in the next videos or the videos ahead. Okay, now one major thing that I do want to talk about with you guys today, and what I know a lot of beginners struggle with, including myself when I was a beginner, is how to be a successful trader. Okay, and a few tips on that to help you guys out. One, the first thing is to trade with no emotion. Okay, a lot of us put a lot of emotion into our money, which is definitely understandable, especially when you work hard for your money, that the money that you earn. We put a lot of our hearts into our funds and our income, so that I completely understand. It's something you definitely have to get used to, especially when you're in these markets. Okay. So trading with no emotion is a big a big thing that you need to realize. I know it kind of seems taboo because a lot of us do the complete opposite, but that's one thing. One tip. Another tip is you have to avoid being greedy. Okay. um you can make a lot of money in the markets, but you can also lose a lot of money. And one thing that you don't want to do is make a lot of money and then go back in the markets to try to make more money. Okay, you cannot be greedy. You have to stick to your rules, and I'll also do another video on that. But you have to learn to stick to your rules. Do not stray away from your rules, because the moment that you do that is the moment that the markets will turn on you. Okay, and it will not work out in your favor. All right, also you have to learn how to use proper leverage. A big mistake that a lot of our beginners tend to do is they want to try to make money fast, and that's not the goal here in when you're trading Forex. Okay, you have to learn these markets, you have to learn the skill, and you have to understand that this is not a get rich quick scheme. Okay, when you're trading, you have to use the proper leverage based on the capital you have in your account. If you are only trading with $100, you cannot leverage a standard lot size. Okay, now you know, there are a lot of traders out here that they do that, but their risk is very, very high. Okay. So if you're not if you're not a professional trader, if you haven't done this for years, I would strongly suggest that you stay away from using large lot sizes or over leveraging your account. Okay, because that will result in you blowing your account. Now you may get lucky. um and, you know, I'm not telling you that you will not make money doing that, because some people, you know, get lucky, or they they have a bomb ass entry. They find a bomb ass entry and it's all up from there. However, you know, with that, you could also risk losing or blowing your entire account. So please understand that. If you need some help with proper leverage, I do have a risk management um, spreadsheet for you guys. If that's something you want to go ahead and purchase, it's down below. You just click that link and you can purchase. Okay. Another tip that I want to share with you guys, it's the last tip for today, is never trade with capital that you cannot afford to lose. Okay. I know a lot of people, um, you know, a lot of our beginners are either one at this point where they've tried a lot of things. You know, they're just trying to find a way to supplement their income, or they're trying to find a way to get rid of that 9 to 5 job. So they're trying to find something that's going to get them where they need to be, and quicker than your old fashioned go to school, take up a course, get a degree, and interview for jobs, and hopefully you'll get one. I understand. I think we've all been at that point. But and a lot of people do that using, you know, income that they cannot really afford to lose. Okay, hoping that, you know, this my last couple $100 will, I can flip it and um you know, make more money and be successful. Well, definitely not what you need to use to trade Forex. Okay, if you cannot risk or afford to lose that money, do not trade with it. Okay, because you when you're trading, you're going to lose. Okay, not every trade is going to be a successful trade. Now you have, you know, you have people who've been trading for years, and you know, 70, 80, 90% of their trades are accurate. You know, when you get to that point, then you know you'll be considered, you know, a pretty profitable trader. But until then, don't ever use money that you can't afford to lose, because then that's when everything above what I spoke of begins to play into effect. Okay, you'll begin to your emotions will begin to show. Matter of fact, they were already in, because you knew that you shouldn't have been trading with that money, and you knew that you couldn't lose it. You couldn't lose it. The plan was never to lose it. So your emotions are already in that capital that you're using. Then, you know, once you start losing the money, or once you get the money, you're trying to flip it, so you begin to get greedy. um, you begin to use larger lot sizes. You stay in the markets all day, hoping to make more money. um, and you'll start to over leverage your account. Okay, so all of those tips will become, those habits will start to play into effect when you're using money that you cannot afford to lose. Okay. So that was my last tip. I hope this video helps you guys. Once again, like, subscribe, hit that bell button, give me comments, let me know how I've done. All right.